In this video, we will break down two quantum-focused stocks that could fundamentally change how computing, artificial intelligence, and entire industries evolve in 2026 and beyond. You will learn why these businesses sit at the intersection of long-term technological dominance and real economic value, and why patient investors are paying close attention now rather than later. These are not speculative fads built on hype cycles or flashy headlines. These are businesses with deep technical foundations, defensible positioning, and the potential to compound value over many years as quantum computing moves from theory to practical application. Their relevance does not hinge on short-term market sentiment, but on long-term demand for exponentially more powerful computation. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Quantum computing is no longer a distant scientific curiosity reserved for research labs and academic journals. It is steadily moving toward commercial relevance, and the companies that control the hardware, software, and enabling infrastructure stand to benefit disproportionately as this transition accelerates. The real opportunity for investors is not trying to predict the exact moment quantum becomes mainstream, but identifying the businesses that are best positioned to benefit as adoption gradually unfolds. The first company we are covering today is IonQ, ticker symbol IONQ. IonQ matters because it represents one of the clearest pure-play exposures to quantum computing hardware that is accessible to public market investors. While many large technology companies explore quantum as a research initiative, IonQ is singularly focused on building scalable, commercially viable quantum systems. That focus matters because quantum computing is not simply a faster version of classical computing. It is an entirely different paradigm that requires specialized hardware, novel architectures, and years of iteration before it becomes broadly useful. IonQ's approach to quantum computing is built around trapped ion technology. Without diving into unnecessary technical jargon, this method allows for high-fidelity qubits that are more stable and more controllable over longer periods. Stability and error reduction are among the biggest bottlenecks in quantum computing today. A system that can maintain coherence and accuracy for longer durations unlocks more complex calculations and practical use cases. What separates IonQ from many early-stage technology companies is that it is not building in isolation. The company has structured its business model around accessibility. Instead of requiring customers to own and operate expensive quantum hardware, IonQ makes its systems available through cloud-based access. This lowers the barrier to entry for researchers, enterprises, and developers who want to experiment with quantum algorithms without massive upfront investment. This model positions IonQ as both a hardware innovator and a platform provider. As more developers learn to build quantum applications, the value of IonQ's ecosystem grows. This creates a feedback loop where increased usage leads to better software tools, which in turn attracts more users. Over time, this type of ecosystem can develop network effects that are difficult for competitors to replicate. From a long-term relevance perspective, IonQ's opportunity lies in the kinds of problems quantum computing is uniquely suited to solve. These include optimization challenges, complex simulations, cryptography, and materials science. Industries ranging from logistics to pharmaceuticals to energy stand to benefit from quantum-enhanced solutions. IonQ does not need quantum computing to replace classical systems entirely to succeed. It simply needs quantum to become essential for a subset of high-value problems. Financially, IonQ is still in the early stages of revenue generation, which is exactly what you would expect from a frontier technology company. Revenue growth has been driven by increasing cloud usage, government contracts, and research partnerships. While the company is not yet profitable, its balance sheet reflects a runway designed to fund continued research and development. This matters because quantum computing is a long game, and companies without sufficient capital often fail before the technology matures. One of the most underappreciated aspects of IonQ's strategy is its emphasis on performance benchmarks. Rather than chasing headline qubit counts, the company focuses on algorithmic performance metrics that better reflect real-world usefulness. This signals a mature understanding of how customers evaluate quantum systems. Over time, buyers will care less about theoretical specs and more about practical results. IonQ's growth drivers are aligned with broader structural trends. Governments are increasing funding for quantum research due to its strategic importance. Enterprises are beginning to explore quantum as a competitive advantage rather than a curiosity. Educational institutions are training the next generation of quantum developers. IonQ sits at the intersection of all three. That said, this is not a risk-free investment. The timeline for widespread quantum adoption remains uncertain, and technological setbacks are always possible. However, for investors with a long-time horizon, IonQ offers direct exposure to a transformative technology at a stage where upside asymmetry still exists. If quantum computing becomes integral to solving critical problems, early leaders like IonQ could see their value compound significantly over the next decade. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now let us shift to the second company on this list, NVIDIA, ticker symbol NVDA. At first glance, NVIDIA may not seem like a quantum computing stock in the same way IonQ is. However, dismissing NVIDIA's role in the quantum ecosystem would be a mistake. NVIDIA's importance lies not in building quantum hardware itself, but in enabling the software, simulation, and hybrid computing environments that make quantum development possible today. NVIDIA matters because it controls the computational backbone that researchers and developers use to design, test, and optimize quantum algorithms. Before quantum programs ever run on real quantum hardware, they are developed and simulated on classical systems. These simulations require immense computational power, especially as quantum circuits grow more complex. NVIDIA's accelerated computing platforms are foundational to this process. What gives NVIDIA a durable moat is its combination of hardware leadership and software integration. The company has spent decades refining its architecture to handle parallel workloads efficiently. This capability translates naturally into quantum simulation, where massive parallelism is required to model quantum states. NVIDIA's software frameworks allow developers to bridge classical and quantum workflows seamlessly. This hybrid approach is critical because the future of computing is not purely quantum, it is hybrid. Classical systems will handle many tasks, while quantum processors tackle specific problems where they offer an advantage. NVIDIA is positioning itself as the connective tissue between these worlds. That positioning is incredibly powerful because it allows the company to benefit from quantum adoption without betting the entire business on a single technological outcome. From a growth perspective, NVIDIA's relevance to quantum is an extension of its broader role in high-performance computing. As demand for advanced computation grows across industries, NVIDIA's platforms become more entrenched. Quantum research is simply one of many high-value workloads that reinforce this dominance. The more essential NVIDIA becomes to cutting-edge research, the harder it is for alternatives to displace it. Financially, NVIDIA operates from a position of strength. The company generates substantial cash flow, maintains strong margins, and reinvests aggressively into research and development. This financial flexibility allows NVIDIA to pursue long-term opportunities like quantum enablement without compromising its core business. It also means NVIDIA can adapt as the quantum landscape evolves, investing in the tools and platforms that gain traction. Another key advantage is NVIDIA's developer ecosystem. Millions of developers worldwide are already familiar with NVIDIA's software stack. When those developers explore quantum computing, they do so within an environment they already trust and understand. This lowers friction and accelerates adoption. Over time, ecosystems like this tend to reinforce themselves. NVIDIA's quantum strategy is not about replacing existing systems but enhancing them. By providing tools that allow quantum researchers to work more efficiently today, NVIDIA ensures it remains relevant regardless of which quantum hardware approach ultimately dominates. This is a subtle but important distinction. NVIDIA is not making a binary bet, it is positioning itself to win across multiple scenarios. In 2026, the companies that surprise investors are often not the ones chasing the loudest narratives, but the ones quietly embedding themselves into essential infrastructure. NVIDIA fits this description. Its exposure to quantum computing is indirect but meaningful, and it complements its broader leadership in accelerated computing. Comparing IonQ and NVIDIA highlights two different ways to invest in quantum computing. IonQ offers focused exposure to quantum hardware and the potential upside of being a category-defining leader. NVIDIA offers diversified exposure through enabling technology and infrastructure that benefits from quantum progress without relying on a single breakthrough. IonQ's long-term advantage lies in specialization and early mover positioning within quantum hardware. NVIDIA's advantage lies in scale, ecosystem, and financial resilience. Both matter. Both serve different roles within the quantum value chain. For investors, understanding these roles is more important than trying to predict which company will generate the next headline. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the StocksGalore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/StocksGalore and become part of our growing community of smart investors. Link is in the description. So here is a question for you. When you think about long-term value creation in quantum computing, do you believe focused specialists like IonQ have the advantage, or do diversified infrastructure leaders like NVIDIA ultimately capture more of the economic upside? Let me know your thoughts in the comments. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.